Alright, so today I'm gonna break down the trade that got me into the finals for the Tradeify Grand Cup. So you can see here that I finished in 140th, okay, out of the top 200. So I'm gonna be breaking down the trade that basically put me in that position. So this was on Friday, and before I traded on Friday, so going into the day, I was in around 350th. So I managed to get myself into the top 200 pretty comfortably and secured a place in the finals. So I'm going to break down the trade that took me from around, my balance before the trade was at around 56,000, 56,500. It was at for me to be in 350th. And then after the trade that I took on Friday, which is the one I'm going to show, my balance was just under 72,000. So it was a very good trade, around 15,000 or so profit on this trade. And I just want to point out that the way that I traded is not how I normally trade. So I put on heavy risk this day because I wanted to make sure that I got into the finals. So I basically, the profit that I already had made on the account, around 6,500, I was pretty much risking the majority of that on this trade in order for me to make enough profit for me to then be able to qualify for the finals. So I just want to point that out before I break down the trade, just to say that obviously this is a tournament, so the way that you trade is going to be different to how you normally trade on your normal accounts. So coming into the day, we're looking at this day here, this candle being Friday, and on a Friday we need to pay attention to how the week has already formed and what is likely to happen on Friday, right? So we see the weekly open around here and we trade higher, and then we put in this reversal on Wednesday with this candle 2 closure, and then we expand with this candle 3 on Thursday. So before Friday prints, you would anticipate then Friday to continue off of Thursday's daily candle, right? So you would anticipate it to open high, Friday to open high, respect 50% of this candle and trade lower, which you can see it does, it never trades above 50%. And then you would anticipate Friday to expand into this low, which originally that's what I was looking for, because I did take a break even short at 9:30 when I was trying to short ES to this low. But at the same time, if we look at NQ, you can see that NQ has taken out that daily swing low, which is previous week low this Friday. So we have to pay attention to that SMT. With that being said, we can drop down to a lower time frame. So I'm going to go to the 4-hour. Basically, we profile the day, right? So if we're anticipating a bearish day, we want to see it open high, put in a strong high that we can count on being the high of day, for it to then reverse from and trade lower. See at 1800, we open high, but it's not a significant high. It leaves this fair value gap above, and then it leaves this low resistance liquidity right here as it trades lower. And then another thing to point out is that during this 6 a.m. 4-hour candle, we had not put in a high on this 6 a.m. candle. So we left this, and we had a gap here as well. We have a gap, plus we have this high. There's a kind of like a draw for price to go higher. And then also my higher time frame targets was basically this fair value gap up here on the 4-hour. The longing from down here. The reason I was able to flip my bias from originally being bearish to this low, then being bullish back into this range, was obviously, first of all, what I've already talked about. But if we drop to just a 15-minute time frame, you can see at 9:30 that we open low, take out this low. We failed to take out this low, so we have that SMT holding. And then we close back above these down close candles. So I'm seeing this as a manipulation, price to expand higher. And if you go to the 3-minute, which is the time frame that I entered on, so this was the trade, you can see this V-shaped reversal signature. Now, whenever you see this signature, this is a very strong reversal signature where price basically expands and then immediately expands back through and closes above this down closing candle range without like struggling to get through it. So notice we have this fair value gap here. Price doesn't even struggle to get through that, right? It just immediately displaces and closes above. So this candle closure was enough for me to get in because, you know, it's not showing any weakness here. It's not showing any willingness to want to go lower. At this point, it's just showing willingness to move higher now. And another thing, I just want to show you that low resistance liquidity. So this is that higher time frame gap. But if you look from 1800, we just consolidate around the open price and then we fall off here. So we don't put in a significant manipulation above the 1800 price for it to be, for me to be confident in that being the high of day. So after my bias is confirmed bullish here, I can use this high, like these highs as a target as well. Now for the trade that I took, I just targeted the 1800 price because on a day like this, when price has put in this large range already, it basically limits how far price can then expand. So if it expands to the downside, that limits how far it can then expand to the upside. Like you wouldn't anticipate this candle to go for the, you know, like the weekly highs. So that means you'd have to be targeting somewhere inside the range. So that's why the 1800 open price is a good area to get out at, because obviously price can, like I was still anticipating price to run into this gap. Like I could have held my trade, but I'd already made enough profit on that account to secure the top 200. Anyway, the entry, like I said before, as soon as we close above this down closing candle range, I'm getting in long, and then my stop loss, you know, you can mark out 50% of this order block and put it there, but I just put it basically under this candle low, so right here, and it was like around a 4R or so, and then took it off, like I said, at 1800 open price. So I just want to show the account balance is at just under 72,000. So before this trade, it was at 56,500, and then I closed out and I was at 72,000 or so, which obviously put me pretty high in the top 200. And then that was it. I would close the charts and I was done. So like I said earlier, this isn't a way that I always trade. I don't risk heavy like that on my trades, but under certain circumstances like competitions or tournaments, things like that, if you want to place high up, you have to be risking more than you're comfortable with, which is definitely what happened on this trade.